Good morning, Predicted Trades family. Hope everybody's doing well. Let's go ahead and dig into prep here. Looking like we're getting a slightly negative reaction to that PPI data, but overall, we're not tanking out of the range from the last couple of days. As you can see on Tuesday, we set a pretty wide range. Yesterday, an inside day that kept us in that range. Let's take a quick look at our economic calendar just to see that yesterday we had retail sales, and they were actually pretty good, showing that retail sales in January were better than expected. I think the best in like 22 months, or the highest increase month over month in 22 months, is something like that is what I saw. So good retail data. Today we have our jobless claims, some housing data, and PPI, Producer Price Index. We have a little bit coming out at 11 a.m., more housing data. Not expecting a big reaction there. Tomorrow, just a couple of data points at 8:30 and 10 a.m. Again, these are kind of small, not expecting a ton of reaction there. Monday, we have a holiday, President's Day. Tuesday, we have some PMI data. Wednesday, we have FOMC minutes from the February 1st meeting, so these are just minutes coming out. Nothing should be shocking here, but we could see some algo reactions. And then the big ones next week. Thursday we have GDP data, which is going to feed into how's our inflation doing. And then on Friday we have PCE, which is going to be the next big one. So kind of a light week. Early next week, big ones being Thursday and Friday. So, where could we be headed today? Overall, you can see that we have been in a bit of a wedge that's just getting tighter and tighter and tighter. Kind of coming to a point today, and pretty much yesterday's range is that wedge. We have our daily 15 and daily 8. Last week we hit the daily 21. We got back above the daily 15 and daily 8. And every time we pull back to them, we bounce, pull back to them, and bounce. So here again today, we are going to be opening right in them. For the last 2 days, I've been saying 41.20 is key. As long as we can hold that, you should go long off of that. And that's kind of going to still be the case today. Our daily 15 was right at 41.20 yesterday, stepping up a little bit. So overall, looking to hold that 41.20 and yesterday's lows around 41.13. About a 7-point range of support if we do slip a little bit into open. Looking to hold there and try to rally back up. If we start to lose that 41.20, that 41.13, then we want to target this zone down below 41.01, 41.08, and then ultimately getting down to 40.90. The daily 21 is now stepped up to 40.90. For the last couple of days, I've been saying if we give out, target down to 40.80 where the 21 sits. Now it's stepped up a little bit. So 40.90, 40.87, 40.80 are the targets if we do give out. We have a 4-hour squeeze down there right at 40.90. That's what this little cloud represents. And in the last 2 days, we've had 1-hour, 2-hour squeezes. Like on Tuesday, we went long at open up to that squeeze top. We shorted back to the squeeze bottom. Then we went long again. Yesterday, we held squeeze bottom. We went long. I think we only shorted once on that pullback, and then we were hitting that 412 call all day on SPY. So we're coming right back to where we opened yesterday on that economic data. You know, if it was really a negative reaction, we would have torn right through this and we'd be at the bottom of this zone. Or we'd already be at the 21 if it was truly a negative reaction. We're already on a downtrend. The data drop just took us to the target. So now we try to hold, maybe catch a little recovery bounce before open. But overall, let's see if we can hold this daily 15, daily 8, and push off of it to try to get back up to this week's highs, and maybe push to the top of this 4-hour squeeze, up at our key zone at 41.83, 41.90. We start to give out, like I said, 41.20, 41.13. We are breaking below yesterday's low, so we're breaking out of that inside day's range. You want to first target Tuesday's lows, which are also right near Monday's lows, at least near the cash session. And then that gives out our key levels right below that. Moving on, NQ. NQ held that daily 8 and took off yesterday. Now about to open right back at it. So let's see if we can hold it basically around 12,550. Also have a daily Keltner there, 12,580. So about a 30-point range. Looking for that to try to hold. Should that give out, you want to target back to 12,500, 12,480, where the daily 15 sits. So another 20-point zone right there that I'm looking for a bounce. If that starts to give out, then we want to target down to 12,400, Tuesday's low, and then down to 12,300 where the daily 21 sits. But overall, you can draw a trend line to say, as long as we can hold at this first bounce zone, we're holding that trend line, we can see a strong recovery. Ready. Ready? It's all about holding this 1941. As long as we can hold that and get back above this daily 8, daily 15, we could play that gap fill back up to the highs, and then maybe on to that 1990, 2000, if we can actually recover and break out. If we give out that 1941, we want to target back to the daily 21 at 1928. And should that give out, then 1910, 1906, yes, last week's low on YM. You know, overall, we only slipped that daily 21 a little bit, set a higher low pretty much off of it to push higher. So overall, looking for this daily 21 to try to hold. At the very worst, near yesterday's lows, 33,900 at the bottom of this 2-hour squeeze, yep. That 900 starts to give out, we want to target back to 33,800, 33,750 where the daily 50 sits. But if we can hold up this daily 21, that 900, start to push back through 34,000, then we want to target back up to that 34,200 where we topped out yesterday and overnight. And if we can go beyond that, then up to 12,400 and 500. On to Apple. So you can easily draw a zone of support here from this 153.5. The pre-market low we just set around 153.65. So a little 15-cent range that I'd want to see us hold up if we have a little dip when we open. Ultimately looking to hold these two lows and this key level, 153.85, to try to get back up above 154.7, 155, and start to break through yesterday's highs, with the goal of trying to get up to like 157, 159 on our way to 160 if we can actually push and break out. We need Apple to be strong to do that. If we start to lose that 153.5, we want to target back to 152.5 where the daily 8 sits. Should that start to give out 151, Tuesday's lows, and then 150 where the daily 15 sits, and then way down here at 147.5 key level is the daily 21, daily 200, and they're crossing over. So if we do see some kind of sell-off and everything's selling hard, it's Apple back to the mean and the daily 200 at 147.5. So let's see if we can hold up and try to keep pushing. Amazon. And got up above 100 yesterday. Now pulling back. Would like to see 99.25, 99.5 be support around that daily 21. Catch a bounce there, get back above 100, and fight back up to this 101.78. But if we start to lose that daily 21 at 99.5 and lose 99, you want to target back down to 98, 97. VA has been very strong lately and pushing against this daily squeeze top. Overall, looking for 214.5, 215 to be support down at the bottom of this 2-hour squeeze. As long as we can hold there around this daily 8 near yesterday's lows, looking for it to push back up to 217, 218 near yesterday's highs. Get through this 218.8 key level, and then start fighting through 220. If we lose that 214.5, you want to target back to 212.5, 211 where the daily 21 sits. Google had a great push yesterday after being beat up and left to think about it. Pushed off that daily 50 yesterday. Got back up near 97, and we're coming back over. I want to see us hold 95, 95.5, and start to reverse back up to fill this gap to 97, daily 21 at 97.25-ish, and then push up to that 98.78, 99.5 where the daily 15 sits, and that psych level 100, 101. If we can continue this pop, if market is going to move up today. Meta. Definitely weaker by comparison to the rest of tech. Already near last week's lows. We need to hold 74, 73.5. We start to lose that. We're coming back down to 171.5, 170. And we'll be firing this 4-hour squeeze down. But if we can find our support, looking for it to get back up above 75, 177 to fill the gap, and the daily 8, and then try to push up to 180 at the top of that 4-hour squeeze. Microsoft. Definitely a little weaker. Overall, this 264.5 up to 265. Yeah, it might be more actually. Yeah, 264 up to 264.5. Looking for that to be support. On Microsoft, looking for a bounce there and to get back over 265, this 266.72, and trying to push back to 270. We start to lose 264, then we want to target down to 260 where the daily 15 sits, 257 where the daily 21 sits, 255, so big key level. Netflix. A great push on Monday and then just kind of going sideways at this daily 8. If we start to lose 357, we probably want to target down to, and we're starting to slip already, 355 and then 352.5 where the daily 21 sits. If we start to lose that, then it's down to 345, 344, Monday's low, and then 340, big key level, and first Keltner to the downside. But if we can hold up at least at 352 to 354 at the bottom of this 4-hour squeeze, bounce off that daily mean, setting a higher low, we could get a nice push back up to 360, 361 key level, and the top of that squeeze. NVIDIA. Progressively higher lows. You can draw your trend lines. And it looks like if you were to kind of connect these two wicks, it'd come across to this 4-hour squeeze bottom at 219, 220. Since we're already slipping down to 222 overall, looking for that 219 to 220 to be support. We could bounce before we get there, like at yesterday's low, 221. As long as we can hold up 220, get back above 222.5, and try to make another push back up to that 229, 230 where we keep topping out. If we start to lose 220 and this 4-hour squeeze bottom, you want to target back to 216, 213 where the daily 15 sits, and that 210 level that bounced us last week. QQQ. Basically looking for yesterday's lows around 304 to hold. The daily 8 is about 304.5. So looking to find support there early and start to catch some recovery bounce. If we give out 304, we want to target back to 302. 300, and then 302 is where the daily 15 sits. Psych level of 300 below that. And 298 is where the daily 21 sits on QQQ. SPY. Already down below 410. Here you go. ES is already down to 4108, 4101. So it could very well be that we're just going to go straight to the daily 21, the bottom of this 4-hour squeeze, and start to settle and catch before we catch any recovery bounces. It seems like trajectory-wise, we're probably going to get to target before we start to try to go back and fill any gap. So SPY trying to hold this 409. That starts to give out. You want to target down to 408, 407.5 where that 4-hour squeeze bottom sits. 407 is probably where that daily 21 is stepping up to. So we lose 409, 408, 407, and then if we can catch a bounce, you want to play back up to 409, 410, and beyond. But if we don't catch that bounce at the daily 21, at 407, this 4-hour squeeze bottom, then we might just roll on over to last week's low around 404 and this level at 402.74. Tesla had a massive move off of 190 on Tuesday, up above 200, up above 206. Yesterday I said watch for that pullback to that 206.82, and you can go long from there. A number of folks hit that from 206 back up to 213. Today, same key levels in play. Let's see if we can hold 210, 210.6 early and start to bounce back up to fill that gap. If we start to lose 210, you want us to target down to that 206.82 for a bounce. If that gives out, then you want to target down to 204.5, where daily Keltner sits, and then 200 where the daily 8 sits. Take a look at VIX. Yeah, VIX made it down near 18 yesterday, but now we're ramping all the way back up close to 20, which is Tuesday's highs where we were kind of tapping out during the cash session. So for any kind of upside recovery bounce, I'm expecting that we open dump a little more to target. VIX will get up to 20. So for any kind of bounce, I want to see us reject 20 and start heading back down through these daily moving averages at 19.6, 19.4, 19.26 for that daily 21, daily 8, daily 15, and then go back below 19 and start the journey back down into yesterday's range, since we're about to be opening outside of yesterday's range. But if we are going to dump to target and maybe even just keep going, we are down 45 on a 68 ATR. We're almost an ATR down, getting close. But if we are just going to shift a break trend and head down now after our run up that we've had the last couple of weeks, we'll probably see VIX start to get above 20, hold it, and then push on to this daily 50, up at 20.5 to 21, 21.5. We topped out most recently near 22. Do have our daily squeeze here. It's getting tighter and tighter, and we've only just kind of come up to the middle of that daily squeeze. So let's see if buyers are going to step in, try to save this on the market, start to bounce us back up above 41.20, and then back up to the levels we've been playing, or if this is the beginning of rolling over and VIX getting back up to the squeeze top to try to push higher maybe. That's it for prep today. Hopefully this is helpful for everybody. It is a free Thursday, so if you're new to Predicted Trades, definitely come check us out. There's a link in the description of this video for you to join our Discord server for free. And on free Thursdays, you can test out our tools. Our Beast tool goes on your options chart every day. Let's just take a look at like the SPY 412s that we were hitting yesterday. And we'll switch that to a 3-minute. There we go. So, this is our Beast system, the Predicted Trade system. And basically it plots key levels on your options charts to play off of every day. Yesterday we had our Beast levels, this red hashed line and this blue hashed line. That's our main weekly Beast buy level. As you can see, on previous days, price action was way above this Beast zone, made from those two lines. And then price action slowly came down to meet that Beast zone on the day of expiration. We were looking at yesterday's expiration, the 15s, the 215s on SPY, right? So yesterday it faded down to our Beast zone, which had a bottom of 48 cents, slipped it to 41 cents, then got back above. We took those along, 48.50 cents. They quickly got up to $1 where we locked some profit. They came back where we were able to get in again and take them up to our open range sell zone, as you can see by the label there, about around $1.30. That's where we were locking profit from 50 cents, so well over a double. And then they come right back down, hold again around 50 cents twice, so we play them again back up to $1.60 to our next key levels. It came back one last time, almost tagged that 65 cents, and then took off to the end of the day to $2. We use this every day in our trading on any option out there. So if you come in and test our tool today, you'll have options loaded with these levels ready to go. So if you're going to play the Tesla 220s or the Tesla 200, put, we're going to have levels for you to play off of there. Certain levels are buy levels, certain levels are sell levels, and you can come learn all this in our server. Taking a look, I see a question in YouTube. Do you really think we can still push up after all the new data coming in? I think anything is possible in this market. And I know how they love to make it look terrible, and then no one wants to buy it, right? And then they take it right back up. Think back to October when we had that huge dump on CPI, and then we ripped up like 2 ATR that day. I think we went up like 200 points. So yeah, I think anything is possible. Have we completely given out? Like giving out, if that data was so horrible, we'd have been through the 21, we'd be near last week's lows, we'd be over an ATR. You know, we were already in a downtrend, and this just added to, got us right down to basically this week's lows. It is an OPEX week, right? So do they really want to deal with a breakout? Talking about like the market makers. Or are we going to see a little bounce that just gets us back into the middle of this range for the week? You know, something that bounces up and then gets rejected back down, bounces up and rejected back down, so that everyone's rushing short. You know, I'm always going to be hesitant. I'm always going to see what can happen, and I'll be ready. You know, if a certain call at open, maybe like the where are we at? Yeah, if like the 410s at open are sitting at a great price in our beast zone, I'm probably going to take a shot. Some little recovery bounce. We're a little bit oversold in all this drop pre-market. You know, they have to balance things. So we could see a little recovery pop up just a fraction of the way and then come back down. So yeah, I'll always be ready for upside, downside, and that's why I try to give thesis for both. Could we hold this zone just like we did on Tuesday and be right back up to these daily moving averages? Yeah, absolutely. So that's it for prep today. Definitely come join us for free Thursday. Test out our tools, see how you like it. We do it every Thursday, so you can give it a couple of tests before you sign up for our service. But good luck today, everybody, and we'll see you in the chat.